Relationships remain sour between EU and UK officials, right? We've seen that over the last few weeks now. This is heading thick and fast into next month's talks in March. So they will be formally sitting down and commencing those talks in terms of trade, right? Because remember, Boris Johnson set that hard deadline by the end of this year, the end of 2020, that Britain leaves. If they don't get a deal that they're happy with, then they just walk away without no deal. Boris, how can you just simply say that? But in terms of things at the moment, continue to be sour. Michel Barnier, the EU chief negotiator on the Brexit front, he said, well, basically he's threatening the UK banking sector. He basically just said that the UK should forget it out of their minds that they could just freely try and negotiate, EU access for UK banks and financial services firms, okay? Now, and that they must, if they want to remain as part of a relationship there in terms of the banking side of things, operating within the EU, then they must comply with EU rules, okay? In line with what the regulator sets out. Now, this goes back to what we mentioned just over a week ago regarding MiFID. So MiFID is a set of rules put together for financial firms operating within Europe, okay, to try and avoid any potential financial crisis. So a set of criteria, so on and so forth, frameworks that banks and financial firms must follow. Now, there was worries and threats that the report suggesting that the EU may tweak that to benefit more so companies that are actually within the EU, okay, in the capitals of Paris, Frankfurt, so on and so forth, and make it less attractive for London. Remember, London's the capital, it's the hub of financial services. It's where everyone wants to do business. Now, if this guy and the EU and other EU officials make it difficult for the UK, what's gonna happen to the pound? It'll be slammed. It'll be slammed. This is a critical part of negotiation without a shadow of doubt. As I explained how much business goes through London, it makes up, I think the financial services sector makes up around 8% of the UK's GDP, which is significant. It's significant enough. And at the end of the day, if they make it less attractive for the UK, make it difficult for banking firms, everyone will start leaving. Outflows from London, outflows of the pound, and then going into Europe, right? And that would be a pound negative. I hope that all makes sense. Obviously, there'd be a loss of jobs potentially, so on and so forth. It's really bad. It's really bad situation. So obviously, as I say, things do not remain good at the moment heading into next month's talk. So it's certainly worth keeping an eye on that and keeping that in your head when you are trading GBP, that any upside that we see remains vulnerable to being sold by the bears. Other than that, guys, don't forget to check out freaknetwork.io for full membership details and forexfundamentals.io for all the fundamentals and our technicals course. Other than that, let's get